By now, we already know closing outside of Keltner channels won't last for long, and reversals become more likely. So perhaps reversals are even more likely when reversal candles form at or outside the upper and lower boundaries. It is indeed the case here, where the bullish reversal candles are also part of forming an even larger bullish reversal connected to a double bottom chart pattern with an incline. Incidentally, the upper boundary of the double bottom runs quite close to the middle line of the channel. Next is also a good demonstration of reversal candle patterns forming outside the Keltner channel and coinciding with a major structure, in this case reaching that clearly defined resistance from previous highs. Naturally, at least some kind of a reversal takes place. The difference here is it's a much smaller reversal than would be expected. And that's just how things work in reality sometimes. There can be confluence among multiple factors, but in some cases like this one, there can be little to no reversal. Though there still is a noticeable pause before there's that familiar breakout that also goes above the channel with movement similar to a 3 methods rising candle pattern. Now price is dropping onto an area of confluence in that it reaches the upper 70s range, which again has the middle line of the Keltner channel running close to it. Candles with bullish reversal qualities appear, but the chart is slow to see an immediate reversal for a larger bullish continuation. Overall, the chart is quite flat, but there is a slight incline developing to place lots of recent closes well within the upper half of the channel. So like previous examples in this series, that is what usually happens before the next step when there are consecutive closes over the upper line. Now if we go back to the beginning of this uptrend and go from the daily time frame to a larger weekly time frame, we can observe a demonstration of confluence across multiple time frames, since some of those earlier upswing points also formed during contact at or below the lower line. The next chart shows similar situations, so it would be more interesting to highlight cases where there is confluence with bearish reversal candle patterns forming around the upper line in price ranges of resistance defined by previous downswing points that ultimately fail to produce any impactful drops. Because the confluence of these basic principles from candle patterns to the Keltner channel and support and resistance ranges help identify areas of higher probability for reversals that realistically won't occur 100% of the time, even when there are favorable conditions, like in this example.